June is just about upon us, and the temperatures are heating up, I guess, unless you live in Wyoming or Colorado right about now. The economy is heating up, and the housing market is on absolute fire. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And in this month's real estate market update, I'm going to follow the exact same format that I have for the past couple of months. We're going to take a look at the latest numbers and projections regarding the economy. We're going to dive a little bit into unemployment and what's going on with the unemployment numbers. And then we'll take a look at the latest with regards to the housing market and try and put all of that together and give you some ideas on what it means for you if you're thinking about buying or selling a home this summer. So let's jump into this month's report. One of the only certainties the last couple of months with regard to the economy has been the uncertainty over what type of recovery we were going to have. There was discrepancies on whether the economy would bounce back quickly or whether we would see more of a U-shaped recovery where we'd have more of a prolonged period of time along the bottom before coming back, or a recovery that would start to bounce back and then flatten out. And in many cases, the information that I've been given to you has been based on the updates that I've been receiving, and I get those updates 3 times a week. And in some cases, it's been considered overly optimistic. And I really just think it's the viewpoint on how you want to look at it. Nobody knows. I don't know anyone out there with a crystal ball that's accurate at all. Many of the predictions so far have proved to be wrong. And I'm not saying that to knock anybody, but we're dealing with a great deal of uncertainty about something that we don't deal with very often. I mean, over 100 years since there was a last pandemic. So it's very difficult to forecast exactly what is going to happen. And based on the latest information that we have now, it does appear as though the economy is recovering very quickly, especially as things are starting to open up. The chief investment officer for Merrill is saying we fully expect the economy could begin to pick up in late June and July with a strong recovery in the fourth quarter. And that is in line with many of the projections that we have provided in the last couple of market updates. And with those, what we have seen is that the major financial institutions, which I've reported on before, with the exception of Bank of America, they're a new addition to this list. And here is showing what they think is going to happen in the second half of the year with regards to GDP. And you can see all of them, except Bank of America, are predicting economic growth in the third quarter. Now, the interesting thing about this is Wells Fargo have changed their projection. It was Wells Fargo that wasn't showing any positive GDP growth in the third quarter. They were delaying that till the fourth. They've now brought that forward, and they also think that we're going to be seeing some positive economic growth in the third quarter. Now, a recent survey by the Wall Street Journal of economists has found, again, the overwhelming belief that the third and fourth quarter of this year is when the bulk of that recovery is going to take place. So 85.3% of all the economists surveyed believe that we're going to see a recovery in the second half of this year. And as I mentioned right at the beginning, we're already starting to see that as many of the states are opening back up, and with things that are going on. The number of people that have returned to stores and shopping and retail establishments and restaurants has been higher than was originally anticipated. And that has shown up in the unemployment numbers. So you probably saw the report that came out last week with regards to the economy. It was widely believed that the unemployment number would go up for May, but it didn't. The economy actually gained 2.5 million jobs. Now, I know that there's a little bit of a discrepancy the way the numbers were reported on what the actual unemployment rate is. The official unemployment rate was reported at 13.3%. It's saying it might be as high as 16.2%. But either way, everyone was forecasting unemployment of about 20%. So whichever set of reporting data that you look at, unemployment went down. And that's because of the 2.5 million jobs that were gained. And look where the bulk of the jobs gained were. They were in the food service and bars, followed by construction, education, and retail. That's kind of demonstrating again how the economy is bouncing back fairly quickly, which is great news for everyone. Now, I'm not trying to downplay the fact that the unemployment level is still very high. It is, but the fact that the number of new claims continues to fall week over week over week, and has since the very end of March, beginning of April, this is all a step in the right direction to getting us back to whatever normal is going to look like on the backside of the pandemic that we've been facing. CNBC recently reported that the May gain was by far the biggest one-month job surge in U.S. history since at least 1939, with the 2.5 million jobs gained. And the unemployment rate, as I just mentioned, here are those forecasts we were talking about. So you have Goldman Sachs, Ratner, Calculated Risk Institute, and the Wall Street Journal. You can see everyone was right around 20% in what they expected unemployment to be. And whether that actual number is 13.3 or 16, as I said, it is still below projections and moving in the right direction for all of us. So what does this mean for housing? And, we've been talking as well about the fact that this is a health crisis and not a housing crisis. There's been a lot of uncertainty and a lot of fear with regards to housing that it was going to be 2008 all over again. And, me and the number of people that I know and I've been watching say, this is nothing like 2008. So many of the parameters are so different. The market conditions are not even close to the same. And that is continuing to show. I mentioned at the very beginning of this video that the housing market was on fire, and it is. In North Texas, where I'm based, in Southern California, where my team is at, we're seeing rapid buyer activity, multiple offers on properties. This past weekend in Southern California, my team was reporting back that people they were showing properties to, there was people waiting to view the home, 4 and 5 sets of people deep. It's absolutely crazy. That is being shown by the number of purchase applications. This is just showing the overall trend in purchase applications, not refinance applications, which were running very high, but actual purchase applications. They continue to increase year over year. Now, June officially is homeownership month. And with that in mind, it's nice to see after several years of decline, U.S. homeownership rates continue to go up. So you can see they kind of peaked back in 04, 05. Then we had that long, protracted downward trend after the 08 crash, all the way until the end of 2015, beginning of 2016, when it started to go back up. So the 65.3% Q1 homeownership rate is the largest that we have seen in quite some time now. So that is very good news. Also, with regards to new homes, when we look at the numbers for May with regards specifically to new homes, the actual of new home sales increased by 2.5%. Now, that doesn't sound like a lot. It only increased 2.5%. But when you consider that the forecast was that new home sales would actually decrease by around 22%, the fact that it didn't decrease and actually increased at all is a huge step in the right direction and shows, again, the strength of the housing market. It's widely expected that housing is going to continue to lead us out of the current recession. So what does that mean for you? Well, if you're planning on buying, understand that competition this summer is going to be tough. Home prices are not going to fall. They are going to continue to increase. all because of the low supply. As a buyer, you want to make sure you are as prepared as possible to buy when the time is right. Get pre-approved. Make sure that is done and you have all of your ducks in a row so that you're ready to go when that right house does hit the market. For a seller, if you've been considering selling, as I just mentioned, there's multiple offers. Now could be the best time. The market is very, very strong. The buyers have returned. In fact, the buyers have come back to the market much faster than the sellers have. What the market really needs right now is listing inventory. So if you're planning on selling, you might want to give it a consideration for this summer. Now, the last thing on housing before we wrap up for this month is delinquencies and foreclosures. If you're a buyer sitting on the fence thinking that a wave of foreclosures is coming, and I know that's been a popular buzzword and people have been talking about it and saying, beware, just understand that the number of homes in distress, number of mortgage forbearances fell last month. And I think that's going to continue. I've got other videos, which I'll link to here, that talk about why you're not going to see a wave of foreclosures and why home equity is driving a lot of that. So keep that in mind. I don't think we're going to see that. Will there be a few? Absolutely, but not the wave that many people are expecting. So if you have any questions or a specific situation that you'd like to talk through, please feel free to reach out. I'm happy to share any nuggets of advice or wisdom that I may have with you so that you and your family can make the absolute best decision for you.